clearly, you've been an essential retailer during this pandemic. What would you say overall are your key learnings or takeaways about consumer behavior, the way we shop, that you're going to carry forward?
Well, I think if you look at the behavior, and I do think things will change as we go, but our food and sundries business with the closing of dining has been very strong. Our stay-at-home business, which would be television sets, computers, furniture, has been extremely strong. Sporting goods, all those stay-at-home type businesses. That being said, we have a very strong travel business. Our gasoline business has gone negative. So we would think that as the vaccine comes, you will start to see some of the changes that will take place. And we expect that starting next spring and summer, you'll see our travel business and our gas business rebound with everything else that's going on.
Overall sales, though, Craig, I mean, there's this thinking on Wall Street that the sales that you have seen, as well as some of your competitors, just can't last, and that it's going to be tough comps next year as the vaccine comes. How much do you think was pulled forward in terms of demand, and what sort of headwinds are you facing on those comps?
Well, if you look at it's going to be, in my wildest dreams, have never seen a year like this, nor did I think the comps would be this strong. And you had a lot of businesses out there that were also closed. That being said, when we first started in February, March, our food and sundries business was extremely strong, and our non-food business was non-existent. Then as things started to open up, our non-food business started to come back. Do I think we can run the same type of comps that we have previously? That's going to be difficult for anybody to do. But I do think as long as the economy stays relatively healthy, that we'll continue to grow our business as other retailers will.
Craig, in the short term, have you started to see some of the same stockpiling trends that we saw in March and April come back as cases have spiked and semi-lockdowns have been put back in place again?
Yes, not quite to the same degree. One of the things that does surprise me was we were going negative traffic count when we started last February, March, April. Our traffic count was going south. Now, for the last 3 months, our traffic count has been very, very strong. So I think with things in place, people are still wanting to come out and shop. They're still buying extra toilet paper, sanitary type items, and things like that to continue to make sure that they have, because some of these items are going to continue to be disinfectants are going to be a long-term need. So you still see a lot of extra. When I say extra buying, we put limits on these things, but I still think that you're going to see this go until probably the middle of next year, if I had to guess.
The membership model has been very attractive to Wall Street, and consumers well before even this pandemic, Craig. And you're managing to grow those numbers and also retain members for a very long period. How do you see that shaping up after the pandemic? And what's a normal rate, do you think, of growth for membership revenue at this point in your lifetime, in Costco's lifetime?
Well, we would hope to continue to grow our membership. It's all about value. And if we can continue to create value out there, no matter what the situation is for our members, we'll continue to grow the base. So I don't see a big issue with that. What we were concerned about and early on was if, in fact, people are going to be hesitant to come in, you pay to shop at Costco, are you going to continue to be able to renew at the same rates? And the answer is yes, we're still renewing at over 91%, at about 91% a year. So we're pleased with that. That is not that did slow down in the middle of the pandemic, but people have stepped back up and renewed, and we're back up to the 91% level.
Craig, it's been well reported in recent years how you guys have had certain loss leaders like rotisserie chicken for $4.99 or hot dogs or whatever it might be in order to try and keep customers happy and get them into the store to spend on other items. Does the online age mean there's less attraction for you to do those sorts of things because it's not as important to get people physically in the stores?
You know, it's still important to get people physically in the stores. I still think brick and mortar is not going to go away, and we want to continue to get people in the stores. And there's no better way to do it than a $1.50 hot dog and a rotisserie chicken.
Shepard Smith here. Thanks for watching CNBC on YouTube.